Hi everybody, welcome back to Ox Talks. It is Wednesday, June 26, 2024. Hope all of you are having a fantastic day today so far and a productive day. Here in the office, doing what I do most days, which is having client meetings, preparing submittals for the court, still gearing up for this trial. Going to be starting on Friday. We are going to report in and then probably start the trial Monday morning. So putting together exhibit binders for trial exhibits, finalizing witness lists, all those kind of things that go along with this job. So I have a few articles I want to share with you today, a few stories. I'm going to keep the video somewhat short because I have to continue on with some other matters and then get to my afternoon workout. But I appreciate all of you being here and subscribing to my channel. We are a growing channel. I'm going to stick with this, continue to come out here and do my best to just, give back a bit, share with things that I guess, look at, you all can read these articles yourselves. I could just say, go on, look at Zero Hedge Today and this, and Fox Business. But I try to give, a few of my insights. I try to tie it in with a real world business operations, things I'm doing in my profession, things I'm going to be looking to do in the future. I shared yesterday with all of you relative to starting a new family business, going to be acquiring properties. I used the word distressed properties yesterday. I probably misspoke. I didn't intend, because one of you guys made a comment saying, why distressed properties? All I meant by that, I probably used it too loosely, which is properties that are either in pre-foreclosure, the loans are behind, the borrowers are in trouble, they're underwater, or whatever it is. I meant those are the kind of properties. But the goal is to not flip properties. The goal is not to come in and rehab and then turn properties. Maybe there's some of that, but very minimal. What I'm looking to do is accumulate and amass a portfolio of rental properties, and not just in California. Another one of you commented yesterday's show about the rental moratorium, what happened, the nightmare that unfolded with landlords during the pandemic, and really especially in California, where landlords could not evict their tenants, and the tenants were given a moratorium on having to pay rent. Yes, those are real issues that I am aware of, and I appreciate that comment. It actually came up when my wife and I were discussing this the other night at dinner. It is a real thing. Will there be a round two of what we experienced in 2020 and 21? I would not be surprised to see something rolled out, probably on a grander scale. So we all need to be prepared for that in terms of our own setups for sure. But yes, in terms of business, acquiring properties, those things are very, very important. That they're legitimate issues. So I will be looking outside, not solely outside California, but also outside California. Let me jump right into some stories today. Our first two have to do with consumers. Consumer confidence is dropping, no surprise to any of us. And a huge consumer good manufacturer, foodstuffs, General Mills, they came out with their earnings today, and it is ugly. So yesterday, at the end of the day, consumer confidence numbers were released, and I had just recorded the video and had it uploading when I saw the story come out. So I held that for today, but it ties in real well with these General Mills numbers. And then I want to close with a story or article I saw with some data points on new home sales, and the numbers are also extremely ugly. So look, we are seeing across the board. I'm not the only one telling you this. You can take it as doom and gloom, but it is just facts. I'm just out here sharing stories with you, sharing data. And obviously, a lot of the data is manipulated. So when they can't even manipulate the data to put a spin on it, things are really bad. Okay. First story is out of Zero Hedge from yesterday, and it's entitled Conference Board Confidence Hope Hovers Near Decade Lows. As it says, consumer confidence, as surveyed by the Consumer Confidence Board, dipped in June to 100.4 from a revised lower May print of 101.3. That's a meaningful decline, guys. The present situation index improved, but the expectations index declined further, hovering near decade lows. And for the seventh month in the last 8, confidence was revised downward. The closing line of this article is, how does one revise confidence lower? That's an interesting rhetorical question. But the article continues saying the overall trend in the labor market indicator remains weaker. Okay. The interest rate and inflation expectations dipped, as did hopes for a higher stock market, right? So you have the labor market expectations declining. You have the interest rate expectations and inflation expectations declining, as well as expectations for a higher stock market. Like, we really need a higher stock market. I think it's still pushing up against almost daily all-time highs. I don't follow it like a lot of you do. That's not my thing. But you just wonder, when cracks will begin to form in the stock market. It says planning to buy a car or a major appliance. Those expectations also fell. So across the board, you have consumer expectations in all these different areas on and in decline successive month after month, with more revisions to the official numbers coming out, the month after that. So let's watch that. The next story I want to share with you is out of the Zero Hedge today, and it's about General Mills shares. It says they slide on dismal sales outlook amid consumer pullback. General Mills shares plunged 8%, it says, at the start of the U.S. Cash session, marking its steepest intraday drop since May of 2022. I will tell you, I just checked before hitting record here. I just checked General Mills shares, and they closed down today 4.59%. And after market trading, it's flat right now. So the decline followed the packaged food company's report of fourth quarter sales that missed average analyst estimates, coupled with a full year sales forecast that also fell short. So not only are they not meeting the numbers that they thought they would meet, but they're also projecting out that they're going to continue missing these numbers and having a weaker performance. This disappointing outlook signals more evidence of a consumer pullback and amid elevated food prices, and builds on the weaker consumer theme. The maker of, General Mills makes Lucky Charms. They make Yoplait yogurt. They reported net sales of $4.71 billion. That's down 6.3% year over year for the quarter. Below the average estimate tracked by Bloomberg of $4.87 billion. So the lowest estimate was that General Mills was going to come in at $4.87 billion. In net sales, and they came in at 4.71. Again, it's a substantial miss. It says volumes for the quarter were also lower in its North American retail business and pet segment. Okay, it says also retailers were reducing inventory in the quarter. So the pet segment's interesting, right? When you see consumers, people's pets, and look, I'm a pet lover myself. You guys know we have Milo. We're a big fan of pets, but the reality is that pets, for some people, they're more important in their life than almost anything else. So look, if you see a pullback in spending on pet items, that should be a huge wake-up call for many that this is worse than even they're saying. Okay, General Mills chairman. This guy said he's the CEO and chairman. His name is Jeff Harmening. And he says that the macroeconomic landscape, quote, is a more challenging operating environment. This comes as elevated interest rates and persistent inflation have triggered a consumer slowdown, mainly affecting the working poor segment, but new evidence of stress has emerged in the middle class. I'll discuss that in the weeks past as well. It is starting to transcend through lower class, middle class, and even upper middle class and beyond that. Everyone is starting to feel pain here. Everyone is expecting this reversal of course and rate cuts and everything to continue to, as they say, encounter a soft landing. The data I'm sharing with you is showing exactly the opposite. Says consumers have been cutting back on spending in recent months and buying less food. Some consumers are replacing branded goods with cheaper private label versions, while others are simply making do with less, particularly, it says, for packaged foods. The company said it expects consumers to continue seeking value given the economic environment. That means things ain't getting better, folks, to use the slang word ain't, okay? It's not getting better. It is continuing to decline. The last article I'll show you today talks about the new homes market. U.S. new home sales crashed in May. And this was out of the Zero Hedge again today. And we've been discussing a few shows, in a few shows over the last few weeks about how new home sales have remained more resilient, right, than existing home sales because the developers and the builders are able to offer more concessions, right? They're able to offer buy down in points. They're able to offer better rates for the mortgage. They are offering, appliances and free upgrades and free this and free that to entice buyers to purchase. Well, that is crumbling now as well. It says U.S. new home sales were expected to dip 0.2% in May, but they didn't. New home sales crashed 11.3% month over month after April's 4.7% drop was revised up to a 2% month over month rise. This is the biggest month over month drop since September of 2022. And listen to this. This is the biggest year-over-year drop since February 2023, taking the seasonally adjusted rate down to the same level as it was in 2016. 2016, okay? So we have to go back 8 years, almost 9 years. Median new home prices fell 0.9% year over year to $417,000, lowest since April of 2023, with the average selling price of a new home $520,000, with a big downward revision for April from $433,000 to $417,000. So we're seeing substantial declines in this arena. This is a B of A came out yesterday and warned. The U.S. housing market is stuck, and we're not convinced it will become unstuck anytime soon. After a surge in housing activity during the pandemic, it has since retreated and stabilized. We view the forces that have reduced affordability created a lock-in effect for homeowners, and limited housing activity will remain in place through our forecast horizon. Listen to that. Limited housing activity, which means, basically dead sales, will remain in place through our forecast horizon. Horizon, you look out over the horizon. That means not in the near future, guys. I mean, that's the way I interpret that. And listen to this. At the same time, the supply of available homes is increased to 481,000, still the highest since 2008. So the supply of available homes is at the level it was at, the highest level comparatively since 2008. Well, guess what was happening in 2008? I shared with you a couple weeks ago my fiasco situation with the foreclosure. In 2008, the foreclosures were on substantial rise. Defaults were on the rise. The bottom completely had fallen out of the housing market. And guess what? People were freaking out. They're trying to unload as things were still dropping. And guess what? The inventory was increasing. That's what's happening now. All right. New home sales are catching down now to the reality of mortgage rates continuing to hold above 7%. And again, it's because the builders are just tapped out. They can only offer so many concessions, so many freebies, so many stainless steel appliances, so many, contributing so many points to close the loan. So we have a lot happening. The market was, I think, kind of flat today. I think the Dow was down a bit. Metals been getting beat up a little bit the last few days. We have some inflation numbers, I believe, coming out on Friday, so let's keep a watch on that. And other than that, look, I'm going to get my workout in this afternoon, working on the business, working on the new business. Everybody should be doing the same thing. One of the stats I read to you was the labor market expectations remain weak. That means that, you know, as secure as you think your job is, guys, it's just not. It's not. You just probably don't know truly what's going on behind the scenes with your employer and in the situation. There are a lot of layers to these, especially medium-sized, larger companies that you just don't have probably the inside knowledge on. Maybe you do. But the point is that I hope that you're doing something to strengthen your financial situation, but also prepare yourself in the event that you lose your job. Prepare yourself in the event that you should have an unforeseen health issue that comes up that forces you to give up your job or leave your position or take a different kind of position that doesn't pay as well. All these things happen in life, right? And that's assuming there's no immediate tremendous financial collapse. We're seeing this happening. But look, even in the normal course of things, we know employers are laying off. We know companies are going bankrupt. I was driving around an area today just here in my local town. I was going to get some fuel in the car, and I drove by 3 storefronts, substantial, stores, not big box size like Walmart's, but pretty good sized stores. There was I think a CVS, a Rite Aid pharmacy was empty. Next to that was one of those 99-cent stores that was out of business. And there was something else next to that. There were 3 huge vacancies, almost this entire, it's like a half a block, it seemed like, of just substantial commercial buildings sitting there in a very bustling area in my local town. So this is just here. We know what's happening across the country in large towns, small towns, rural areas. Please feel free to comment below. Let me know what's going on, what you're seeing in your areas. But look, think about getting some kind of a side hustle going. I know it's a broken record. Think about that. Do your best to be working on that credit score, paying down the debt, and not taking on new debt, new obligations that you really don't need to be taking out right now. Obviously, there are extenuating circumstances all the time for things that are unforeseen that come up. And it is what it is. We had a vehicle, one of our vehicles went in the shop last week. It was leaking coolant. And $3,000 later, we had a radiator crack that was leaking some coolant. We had front brakes were needed, and these things were needed on this vehicle. It's one of the family vehicles, one of the vehicles that my daughter drives. And so it's got to be working properly and be safe. And so look, $3,000, wham. Obviously, I can take care of that. It was kind of a depressing wake-up call to get that bill yesterday when the car was picked up. But a lot of people can't, right? They just can't they would have to go put that on a credit card or borrow it from a family or a friend. And so, look, I understand everyone's coming from a different perspective, different position. But we all have to do our part to understand these things happen. And so do you have some money set aside for this proverbial rainy day? I'm going to get my workout in about an hour. Please get your steps in today. Get out of the chair. Get away from your desk. Do some walking, however you can do it. Obviously, with your limitations in mind. Try to get some strength training in. Lift some weights. Keep that muscle tone. Watch the diet and the calories. With that being said, of course, I said I was going to have a shorter video, and now I'm at 18 minutes. Apologize for the rambling. But thank you again. Each and every one of you means a lot to the channel, to me. If you're not subscribed, please subscribe. And most importantly, share the videos with family, friends, coworkers, and colleagues, because we are watching the collapse in real time. All right. Have a good night. See you tomorrow. Bye.